So welcome back to our YouTube channel. In these sessions for the next couple of weeks, we'll be looking at cost accounting, or what some call management accounting, and we'll be doing a few tutorial questions and also touching a few topics under the course. So for this session, we'll be focusing on cost classification. And you might ask, what is cost classification? I hope we would know what cost means and the definition of a cost. But cost classification is the grouping of costs based on specific or common characteristics. And on the screen here, we have a few of them. But some of the main groupings, as you can see on the screen, includes by function, by nature, by behavior, by time, based on decision, and based on production, right? So these are some of the major elements and groupings of cost. But for the next few weeks, we'll be focusing on product, grouping of cost by product and production cost. And production cost, as you can see, is the cost of a finished product built up from its cost elements. And we'll look at what are the cost elements in the next few slides. Again, production costs are identified with goods produced or purchased for resale, right? Production costs, also referred to as inventorable costs, they become expenses in the form of cost of goods sold only after the inventory is sold. Some major elements of production costs are product costs. These are divided into direct and indirect production costs, right? So that's just a little background information before we go in to our question. So some key points that I want to look at, some key calculations, some formulas before we go into today's question includes the following. So the main elements, as we had said before, the main elements of production costs are another name, as it had said prior, for production costs, inventorable costs. The main elements of these includes raw material, direct labor, and manufacturing overheads. And remember, prior I had said your production cost is divided into direct and indirect costs. So we can see here the direct costs, the direct labor, the direct raw material, and our manufacturing overheads would be the indirect costs, right? Note that a manufacturer carries three types of inventory. And we're seeing some shortenings there, RM, WIP, and FG. And we'll be talking about how they are used. So let's look at just a little key, because we won't be writing out all the words, we might be shortening it. So COGS stands for cost of goods sold, COGM, cost of goods manufactured. And I hope that's triggering your brain. Okay, what's the difference? Cost of goods sold, cost of goods manufactured. So what it's meaning is that, okay, what is sold is what was manufactured, but it doesn't mean that everything that was manufactured is sold. And therefore, that's how we have two different costs, right? TMC is total manufacturing costs. WIP, as we're seeing down here, is work in progress or working process. You have DM, which is direct material, RM, which is raw material, and FG, finished goods. So just to give you a little key, so you would know what we're talking about if we're supposed to use the acronyms for them. So a manufacturer carries three inventories: raw materials inventory, working process inventory, and finished goods inventory. And I believe these are self-explanatory. Raw materials, the raw good without being processed. Work in progress or work in process. What does that mean? It means that something is being made, but it's not finished, right? And then you have finished goods. This is what is finished. So this is the progress of your inventory. And this is why a manufacturer has these three types, because a manufacturer is one who makes something. You use raw materials, or you use a previously finished good and you add some other elements to it, right? And then you turn it into a new finished goods. So that's another point. We'll be differentiating between a manufacturer and a merchandiser. So you have formulas that are specific to a manufacturer because he's making stuff, and there are formulas that are specific to a merchandiser. A merchandiser buys finished goods and just sell it back. There is no additional work or effort or production that goes for a merchandiser. Right? Another key point, cost of goods sold. And this is where we're going into our formulas. So cost of goods sold, and in bracket, we're seeing manufacturer. So this is the formula for finding cost of goods sold for a manufacturer. So cost of goods sold for a manufacturer is equals to beginning FG, beginning finished goods inventory, plus cost of goods manufactured minus your ending finished goods inventory. Then we look at cost of goods sold, but this time for a merchandiser. And I just explained the difference between a manufacturer and a merchandiser. So here, it's similar, but there's just one change, right? So the cost of goods sold for a merchandiser is beginning finished goods inventory plus purchases minus ending finished goods inventory. So both have finished goods inventory, right? However, the difference lies in the middle. For the manufacturer, it's cost of goods manufactured. For the merchandiser, it's purchases, right? So that's how you find your cost of goods sold for the two. And then we have cost of goods sold as used in your income statement, right? And we would know what an income statement is. It's a financial statement of a business that shows the revenue and the expenses to yield your profit, to show your profit. So that is just sales revenue minus your gross profit. And if you're supposed to think about it, your income statement is showing your profit. What is the natural, the layman equation for finding profit? Revenue minus the cost to sell the goods minus the expenses, right? So when we reverse or we change the subject of the formula to find the cost, the expense, it's gonna be cost of goods sold equals the revenue minus your profit there. So we can see, all right, we found how to find cost of goods sold, right? But we're seeing in cost of goods, so we have some other elements, and based on our key, we have some other elements to find, and that's cost of goods manufactured. So we're seeing here to find cost of goods sold, you need to know cost of goods manufactured. And the formula for cost of goods manufactured is equals to beginning WIP, beginning working process inventory, plus TMC, your total manufacturing cost, minus your ending working process inventory, right? From there, we need to find what is TMC, what is total manufacturing cost. And total manufacturing cost is found by direct material used, and the user is underlined for a specific purpose. You can have direct material, you can have direct material purchase, you can have direct material in total, but to find total manufacturing cost, it's direct materials used plus your direct labor plus your manufacturing overhead, right? So how do we find direct materials used? Your direct materials uses your beginning raw materials inventory plus what you purchased, your raw materials purchased, minus your ending raw materials inventory. So essentially this is saying, okay, what did I start the year with? All right. What did I buy? Because on a daily basis, on your production cycle, you'll always be buying more raw materials. So what did I have before? What did I purchase? Together, that gives me what I have available, right? When I subtract what I have left, it would show me, it would give me the answer for what I have used. right? I hope we are seeing that. So essentially, when you're told to find cost of goods sold, you have to find cost of goods manufactured, you have to find total manufacturing cost, you have to find direct materials used. So essentially, you're working from the bottom to the top. So you're working from the bottom, finding direct materials used, then you're putting that answer in the next formulas to come to eventually arrive at cost of goods sold. And we'll work it in a question to come. A few other points is knowing that there's a difference between raw materials used and raw materials purchased. There's a difference between total manufacturing costs and total manufacturing costs to account for. And we spoke to that. The direct materials used is what you use to make these goods. Direct materials purchase is the additional inventory that you purchased, right? And the last point, production cost is the same as total manufacturing cost, right? Because essentially it's your raw materials, it's your direct material that you use to make the good, right? Plus your direct labor, plus your manufacturing overheads. And at the top, the main elements of production cost is direct raw materials, direct labor, and manufacturing overheads. So this statement, we have proven it to be true. So let's look at a question. So it says compute cost of goods manufactured and cost of goods sold from the following amounts using the equation method. And here the equation method is just a formula. What if it said to put it in a schedule? Essentially, a scheduler table is the equation just ruled up with the columns and rows. So if they ask you to put it in a schedule, it shouldn't trigger, it shouldn't make you think, but I don't know the schedule. If you know the formula, you know the schedule. All you're doing is putting the equation vertically. The equation is horizontal in the equation method. However, in the schedule, it's just vertical, right? So let's look at information that we have. And based on us going through the formulas before, we kind of have an idea of the type of information that will be needed, that we should be looking for. Because to find cost of goods sold, you know, you need to find cost of goods manufactured. To find cost of goods manufactured, you know, you need total manufacturing costs. To find total manufacturing costs, you know, you need direct materials used, etc. and etc. So direct materials used, you need a beginning raw materials inventory and ending and what was purchased. So we see we have a column for beginning and ending, right? So we know, okay, it's going to give us the information. So we can find direct materials used, right? Going up, we can find total manufacturing costs. Going up, we can find costs of goods manufactured because we have working process, beginning and ending, and cost of goods sold, we have finished goods, beginning and ending. So when you see a question or when you get a question, and it asks you to find cost of goods sold or cost of goods manufactured, look through and see the information that you have, and you can better be able to navigate the question. So just going back to look at our formulas, again, we say we're working from the bottom up because in an effort to find cost of goods sold, we need cost of goods manufactured. To find cost of goods manufactured, we need total manufacturing cost. So we're working from the bottom, which is direct materials used, upward. And we know we're using the equation for cost of goods sold for the manufacturer, right? In this topic, most times you're finding the information for the manufacturer, unless it tells you otherwise. And not only that, based on the question that you're given, right? The information that is there, you should be able to know which equation you're finding. So let's go right into it. So the first thing is first, we need to calculate cost of goods manufactured. We need, because we're working from the bottom up, we need raw materials used. And the formula for that is beginning raw materials inventory plus raw materials purchased minus ending raw materials. So we go back to our question, beginning raw materials or direct materials inventory, right? Plus the purchases minus the ending. And that's what we have there. And our raw materials used is $71,000. The next equation is total manufacturing cost, right? So our total manufacturing cost here, the formula for it, the raw materials used that we just found, plus your direct labor, plus manufacturing overheads. And we can go back to the question, look, we just found our raw materials, use our direct labor and our manufacturing overheads. Those are the figures. And we would have gotten total manufacturing costs to be 192,000. After we found total manufacturing costs, we can now find our cost of goods manufactured. And that's your beginning working process plus your total manufacturing cost minus your ending working progress or process. So both of these can be found based on information that we would have gotten, and our total manufacturing cost comes from what we just calculated. And now our cost of goods manufactured is $200,000. So now, based on calculating our cost of goods manufactured, we can find our cost of goods sold. And the formula for cost of goods sold is beginning finished goods inventory plus the cost of goods manufactured that we just calculated minus ending finished goods inventory. We put that in our formula, and our cost of goods sold is 195,000. And just to make sense of why we're using which of the type of inventory at a particular time, for cost of goods sold, right? You're using finished goods inventory because if you're a manufacturer and you're making goods, you can only sell goods that have been finished. So in this case, for cost of goods sold, all right, so you have the various inventories. Remember, a manufacturer has 3 types of inventories, right? So which one we use for cost of goods sold? If we're supposed to sit and think about it, you only sell finished goods, right? So that's how the logic comes in to use finished goods in the cost of goods sold formula. For the cost of goods manufactured, right? At any given manufacturing plant, right? You might not have finished making all the goods at any point in time, right? On every given day, you'll always have goods that are still being produced, that are still being worked on. So in that case, that's where the logic comes. For cost of goods manufactured, we're using working process. We're using that inventory. All right, so let's look at another question. So it says, the following information is extracted from the book of Bashu Company, a manufacturer of loafers, right? And we have the same type of information, raw materials, working process, finished goods, raw materials purchase, direct labor, and manufacturing overheads. And they're asking us to calculate cost of goods manufactured and the cost of goods sold using the equation method, using the formulas. And again, if they ask us to put it in a schedule or a table, it's the equation vertically. So going back to our key points, looking over our formulas again for the various types. So let's work it. To find cost of goods manufactured, we're working from the bottom up. So we're using raw materials used. The formula for that, beginning raw materials plus raw materials purchased minus ending raw materials. We would have put that, looked for the figures in our question and put it there. Then, after finding raw materials used, we can now find total manufacturing costs. And the formula for that, raw materials used plus direct labor plus our manufacturing overheads. And again, total manufacturing cost is the same as total production costs or production costs, right? Looking back at the question to get the direct labor and manufacturing overheads, taking the figure that we just calculated for raw materials used, plugging that in, and we would have gotten total manufacturing costs to be 21,400,000. From there, we can find our cost of goods manufactured. So here we're using working process inventory plus our manufacturing cost that we just calculated, right? Put in the necessary figures there. Our cost of goods manufactured is 21,300. Then we can find our cost of goods sold, right? Cost of goods sold, what we're selling, finished goods. So here we're using finished goods inventory. The formula, beginning finished goods inventory plus your cost of goods manufactured that you just calculated minus your ending finished goods inventory, right? So here you're seeing we've found the figures from our question, plugging in cost of goods manufactured that we just calculated, and we would have gotten our cost of goods sold figure. And similarly to how I explained direct materials used, the same explanation can be used for cost of goods sold and cost of goods manufactured in terms of explaining the formula. So if we're supposed to look at it, beginning finished goods, this is what we started the period with, plus what you manufactured, right? So all the goods that you manufactured that are now finished together, that gives you all the finished goods that you have available to sell if you're supposed to add those together, right? If you know all the goods that you had to sell and you know what you have left, subtracting what you have left from what you had altogether tells you what you had sold. So that's the explanation of the formula, right? So this is the end of our question. This is the end of us just looking at cost classification on a minute level, but looking at some important formulas that will take us through the rest of this course and the rest of just doing cost accounting and manufacturing accounting. So as per usual, if you have any questions, drop it below in our comments. If this video helps you any at all, remember to like it, share it with a friend, subscribe to our channel, right? You can always reach out to us via email or on our Instagram page. So until next time, we'll see you. You can watch our other videos. Hopefully they'll help you there on financial accounting, but they both intertwine. So until next time, enjoy the rest of your day and thanks for watching.